Hey guys, it's me, Erin, your Red Bottom Realtor, and I'm coming to you today to talk about things future homebuyers should know. Now, this is a lot of information, so we're going to chunk it, but this is part one. So, I want you to know there are roughly four parts to this. Four parts to this. So it's a lot of information, but that's what I'm here for. I'm here to guide you during the home buyer process. So let's just go ahead and get started. Excuse me. Future home buyers should be well informed and prepared, and that's what I'm here for, to help you embark on your journey when you're purchasing a home. There are essential things that you should know. Number one, financial preparation. I can't say this enough. Financial preparation is always the key. Start knowing that you are ready so that you don't have to try to get ready halfway through the process. It elongates it, it gives you more strife, it adds more pressure and tension to you if you don't have all of the things that are needed up front. This includes understanding your current financial situation, including your income, expenses, and savings. Determining how much you can spend on a home. That includes factoring down a down payment, your monthly mortgage payment, and any associated costs. You may have an HOA payment that may take away from the cost that you will want to pay per month, and take that into account when you're saying, hey, this is the max amount I want to pay, not just the mortgage but the max amount I want to pay. And the second part to that is make sure that you and your significant other or your partner that is going into this deal with you, if you're not doing it by yourself, make sure that you guys are aligned to what that number is. You do not know how many times, and I have to stress this, you do not know how many times you can go to a couple or a partnership and say, hey, give me the basics, give me your non negotiables, and give me your amount that you would want to pay monthly. And the numbers are so off, and then the needs, the non negotiables, are so off. And I tell you one thing, we can't go anywhere until they're aligned. So, understanding where you are financially, preparing for it, and understanding and determining how much you want to spend are key. Also, know your credit score and your history because they play a significant role in your interest rates. And you can review your credit report. There are many places online that you can look at to see what your credit report is, if there are any errors, because there tend to be from time to time. You can work on that if necessary up front. You do not want to have a deal on the table and you're trying to work out something on your credit. Just not a good thing. Number one, we're going to review that again, financial preparation. Number two, down payment options. Now, I want to start and preface this by saying that I am not a mortgage broker or a mortgage lender. So, if you need specific information for your needs, then I suggest you go to them. And guess what? I'm asking all mortgage brokers and all mortgage lenders to give your information below. Let's go ahead and give the people what they need. Let's start this process if they're ready, because there are some things that they need to be aware of. There are different down payments depending upon the mortgage financing you get. Now, of course, if you're paying cash, you don't have to worry about this. But if you're not paying cash, and that's the vast majority of people who don't pay cash for their homes, even Beyonce financed a home. Okay, so there are some things that you need to consider, which can be varied based on the type of loans. For instance, you have conventional loans, VA loans, FHA loans. If you're talking to your mortgage lender or mortgage broker, they can give you more information about that. And the great thing about me being a real estate professional is that I have a network of people that you could speak to. So if you want if you have a specific need, or you want to work with somebody who specializes in VA loans, I have that. I can provide that information for you. But you need to know what type of loan you have and the down payment option, and then start saving for that down payment as early as possible. Yes, interest rates change on a monthly basis. It may, there are different promotional deals depending upon the mortgage broker or mortgage lender, but you can have an estimate of what you want. If you know roughly you want a house that costs $100,000 and the down payment is 5%, you can say roughly how much that amount is. And then if they have any assistance, hey, better for you. You have money that's saved, but at least you're trying to prepare yourself. So let's go over it again. Number one, what is it? Yes, it's financial preparation. Number two, down payment options, knowing your down payment options. And number three, mortgage types and rates. Make sure, I cannot stress this enough. This is probably the biggest financial decision that you will make as an individual or a partnership. So make sure that when you're going into it, you're just not just saying, okay, somebody told me something, let me go through it. You're actually taking the time to research and understand the various mortgage types available, such as fixed rate, adjustable rate, and government backed loans. Once again, I am not a mortgage provider, or a mortgage lender or broker, but I do have a network of people that can give you more information about that. And once you guys figure out what works best for you as a realtor, I step in and make sure that we're getting the asset, the real property that actually goes with that type of loan. And make sure, even if you know what type of loan, whether it's fixed rate, adjustable, government backed, make sure you're comparing the interest rates and terms from different lenders to find out the mortgage uh, needs that are best for you. This is a real world scenario, guys. I did an FHA loan. I had an FHA loan, me personally, and I a conventional loan. I had a conventional loan personally, and I knew that most of the time people say, oh, if you're getting a conventional loan, save up 20%. So in my back of my mind, I already had the 20% saved. But I asked the different lenders, hey, is it always necessary to put down 20%? Of course, they will want you to put down as much as possible, but is it always necessary? Let's talk about the different options that I have as a client and a consumer. And they told me, so my payment that I thought would be my down payment of 20% actually ended up being 5%. And you know why? Just because I asked and I tried to research and get the best terms available. That's my personal story, but it doesn't necessarily have to be yours. You may have to do the 20% dependent upon the home type. You may have to do the 20% dependent upon the rate, your credit score. There are so many factors and variables that are there, but that's why it's always important to get the information that's needed and do your research, shop around, because one size does not fit all, and there are nuances to it that only speak to your needs. So, number one, let's say it again. Yes, you were financially prepared. You did all your due diligence and decided what you wanted to do based off of what you currently have, including your expenses and your income. Number two, you decided to do the down payment options, or you decided to not do them, but look at the down payment options for the loan that you thought or you think that you may want to have. You not only looked at the down payment options, but you looked at the mortgage types and rates. You know roughly what your credit score is because you are an informed consumer, and you are my client, hopefully. So you know that I will always stress that you have to be prepared so that you don't have to worry about anybody else trying to come to you on the back end. Not only have you gotten your down payment options, but you looked up your mortgage types and rates, and now we're looking at additional costs. So when you're doing your budget, make sure you're budgeting for your closing costs, your property taxes, any type of homeowners insurance, and any type of ongoing maintenance that you may have, and add that to your budget. Oftentimes when we were thinking about it, we're thinking about, okay, I just need to have the amount for the HOA, and I need to have the amount for the actual mortgage payment. But you need to kind of budget to some degree some maintenance costs there. Whether you spend it that month or not, you'll have it as a safety net so you don't have to worry about it. And you want to make sure that if your property taxes are not escrow, that you're taking into account the amount that's needed. If your homeowner's insurance is not escrowed, then you want to make sure that you're looking at how much it will cost you and that you're taking into account how much you will need to pay and the amount of coverage that you would like. And number 5, understanding once you have had these internal conversations with yourself, are these important discussions with your significant partner. Now we're ready to make sure that we go to the stage where we actually present our information to the lender and say, or to the broker and say, hey, I would like to get pre-approved. Not pre-qualified, but pre-approved. Once again, I want to stress that the importance of being pre-approved versus being pre-qualified. We have to learn the difference between this, because if we don't understand the difference between pre-qualified and pre-approved, you may not get that home. Pre-approval is stronger. It is a stronger commitment to the lender, and it makes them more appealing to sellers. But let's make sure that we're not using that term interchangeably. Pre-qualifying is just the first step. They basically take what you tell them and say, okay, based on this information, we think that you could be pre-qualified. Pre-approval, however, is the second step. It gives you a conditional commitment to actually grant you that mortgage. They're giving you a conditional commitment from that lender or from that broker to actually get that mortgage. Whereas pre-qualified, once again, just gives you an idea of how much that loan is a much stronger offer. If I am selling my home and I have 2 buyers and one has a pre-qualifying letter and one has a pre-approval letter, I'm taking that pre-approval letter, all things being considered, or all things being equal, every day, because what they're telling me is that the lender has enough confidence in their application that they can have a conditional commitment, and that is huge. So I hope you're able to take those 5 steps. If you don't remember them, don't worry. It is down below and it is also on the next slide. When you're taking those 5 steps into looking at the future things home buyers should know. Once again, if I have any mortgage lenders or mortgage brokers out there, reach out. I want to hear from you. Let the people hear from you. Let's put this information down below. I have a network, but there is a network that is bigger than mine, and I'm always willing to work with professionals that are good and crafty within their definitely within their field. If you have any questions, I'm always just a DM away. My name is Erin McCullough. I am your Red Bottom Realtor, and I'm with Family Realty.